We've had some breaking news out of the Fed over the last couple of hours. Neil Kashkari of the Minneapolis Fed saying, you know what, hold off for now on rate hikes. And you had Charles Evans earlier saying of Chicago's Federal Reserve, we should wait and see. So between that and the changing landscape in global oil production, markets are frequently being driven by emotion more than fundamentals. With all the noise out there, how should you best navigate these tricky waters? IHT Wealth Management President Steve Dudash has more than $750 million in assets under management. Steve, people are always talking about what they should listen to. I need to back this in and ask you, what are, say, for example, two things people should ignore as they invest for the second half of the year?
Okay, so this isn't easy to do, but you got to ignore the politics that are going on because we're going into the summer. You know it's going to be a circus. It looks like we know who the two players are. We know they're very polarizing people, and every time they say something specifically, Trump does say some things that are a little bit more bold out there that can drive the market in the next few months. So you gotta be able to drown out that and try to look at the fundamentals as much as possible. And then oil. Oil is going to be the story all year. It has all last year too. Saudi Arabia versus the fractors, it keep going on and on. You won't see $100 barrel oil again, but you're not going to see them in the 20s as well. Look for those overreactions. Just like you just said, it's not the fundamentals lately, it's been emotions. And so you got to try to drown that out and just get down to what actually matters, and that's the bottom line with these companies. Yeah,
oil right now down about 3% in the aftermarket. It's interesting that you know, we sit there and we say, well, what would you buy? But also, what would you sell? We can put up on the screen a couple of names that you would buy right now, and then we can follow that with what you would sell. British Petroleum, BP, is actually at the top of your buy list, along with, as I understand it, Alibaba, Amazon, and the biotech sector. These sound like gutsy, risky plays here.
Well, but if we're in a flat market, right, you cannot believe that the market's going to jump 20% a year like it has the last few years. You got to try to pick your spots if you're looking to try to make outsized returns a little bit. So Alibaba, incredibly profitable. They're not going to hit half of their revenue with the U.S. like they're trying to do, but they are growing 20% a year in China, and they are a massive company. They're twice the size of Amazon and eBay right now. So companies like that, look at those. BP, that's just oil. That's a company you can throw in there and put in your portfolio for 40 years. It's going to be around. It's going to be profitable.
Why not?
Yeah, and then Amazon, hard to get into that, have any competition, get in that market. And their Amazon Prime Now, it's huge right now.
Hey, listen,
delivery.
Here comes the closing bell. We want to thank Steve Dudash, and as you can see, the markets are mixed here with the S&P and the NASDAQ higher, the Dow down 42.